December 23rd, 2024. The market is about to close. We're about to get the bell in a second, but I just started the video a little bit early. Today, we had a similar pattern to what we had the other day, and that was a breakout below a bear channel. You can see the other day, we had a breakout below a bear channel, a failure, and then a bull trend. And then that bull trend, what's the market cycle? Spike, pullback, channel. Assume it was around a 50% pullback. I haven't checked. Yeah, we got to around a 50% pullback. And you can see we got, zoom in a little bit here. We had a bear channel, a breakout attempt on 7 and 8 below a bear channel, and then a failure, a parabolic wedge, 1, pullback, 2, pullback, 3. Or sorry, 3 pushes down, 1, pullback, 2, pullback, 3. So 3 pushes down, and then a parabolic wedge reversal up on bar 9. And that led to a bull trend. So the market will oftentimes repeat patterns. So if you get a failed breakout below a bear channel one day and a reversal up, often later in the week, you'll get the same pattern or the opposite pattern, maybe a failed breakout above a bull channel, something along those lines. I thought that it was a little bit more likely that we went up today, considering the fact that we had this magnet, the bar 61 close, we have this magnet, the bar 36 high, and this rally was so strong that it should get a second leg, and the second leg should trade up above this high. So as much as this was a pretty decent pullback for the bears, I thought we were probably going to get a second leg up. Bar 1, a bull bar, but a large tail on the top, probably buyers below, probably sellers not too far above. Right now we're in a bear channel, so it's really a question of, do we get a trend line break and a breakout above the bear channel and a retest, or do we get a breakout attempt below the bear channel? And if we do get a breakout attempt below the bear channel, how's it going to look? 2, there are buyers below 1, and we got back to around the bar 1 close. 3, a bear bar closing near its low. Do you sell below 3? I don't know. I mean, maybe. I personally was not really looking to sell. I was really only looking to buy or be flat. 4, consecutive bear bars. You could sell the close for a second leg down, but I don't really think it's all that great because you're selling near that low, 73, 78, now 4. So it's possible 3 pushes down, and there's probably buyers somewhere down here. 5, a bull bar, but a large tail on the top and a large tail on the bottom. Not really worth taking to buy above 5. We'll probably go at least a little bit higher though. 6 consecutive bull bars, but neither one of them really needs a second leg all that much. I would imagine that if we start to bounce, there's probably sellers above willing to scale in higher. If we do get another bull bar, let's say that 7 was a big bull bar closing near its high, it would be up on 5, down on 5, up on 6, down on 6, up on 7, a parabolic wedge rally. 8, a bear bar, good for the bears. We went back to a new low, but probably buyers down here scaling in lower. Again, we're at the bottom of the bear channel, so it's difficult to be looking to sell in this area. And then, sorry, that was 7. And then 8, a big bear bar, but really climactic. If you're selling below 8, you got to think about what you're expecting out of the trade. You're selling a third leg down, 1, pullback, 2, pullback, 3. And if you're going to sell the close, you want to see 9 collapse. And instead, 9 is a bull bar closing near its high and a parabolic wedge bottom. So you can buy above 9 and just take a chance that's the low of the day. That's a pretty reasonable thing to do. I did buy above 9, but I ended up exiting in here because I thought 11 would close on its high if we were going to bounce. And then I bought it back somewhere in here and exited down here. I actually ended up doing, so I was about break even on these, but I ended up doing really well today. I took a couple of buys. I bought above 25. I bought the close of 29. And then I bought the close of 30, or I bought below 33. And then I exited part up here, and then I exited the rest right here. But most of those buys were based on context. I marked the buy above 25 as a buy in my, if you saw my slide, I marked above 25 as a buy simply because I did it. Because if we're in a bull trend, the reality of this bull trend, well, actually, I'll talk about it when I get there. But it was really pretty much a calibrated expectations trade. That was the only reason I took the buy was because I knew what was going to happen if we were going to get a bull trend. And if we weren't going to get a bull trend, it would be pretty easy to exit quickly. So 10, a bull bar, but a large tail on the top. So it's a little bit of a pullback. We should get a second leg from 7 and 8. 11, another large bull bar, or another bull bar, but again, a massive tail on the top. Probably, I think this was a disappointing bar, and sometimes you get a second leg down on 11. Sometimes the market tries to trap traders out. So 60% chance that when you get the opening swing trade, the market will try to trap you out. That's what ended up happening here. This is the market trying to trap the bears out, or the bulls out. It's not really that great to sell below 15. That 12, 13, and 14 good for the bulls. And we have a 5-bar micro channel, and 14 is the 6th bar, but obviously it's climactic, right? 14 is a breakout above the 5-bar micro channel. And bulls want to get a follow-through bar above the moving average, and then 15 closes on its low. So 15 closing on its low after testing the moving average, we haven't had a close above the moving average. That was why I exited, because I thought that 15 might need a second leg. You could hold, you could definitely hold, but I had a lot of confidence in my ability to get back into the market if we started to rally, which obviously, as I mentioned, I did. So I thought that it's okay to exit below 15 as well, but it is a 6-bar micro channel from 9 to 14, and we should get a second leg up, meaning we should get one leg above 4 or one tick above 14. However, we might go sideways for a little while first. 16, another bear bar, probably not really going that much lower. If we are going to go lower, 17 should probably race down and get a really big bear close. And instead, it's just a disappointing, more of a disappointing doji bar. 18, a bull bar, but a massive tail on the top. Probably sellers above, scaling in higher. And then 19, a big bull bar. But again, possibly a nested second leg trap. 18, up on 18, down on 18, up on 19. And the bears are hoping it's a low 1, 15, low 2, somewhere over here. However, 19 is good enough for its own second leg up. It's reasonable to buy above 19. And if you get a big bear bar that needs a second leg down, then you can just exit. If you'll notice, if you did buy and you were going to exit when the bears needed a second leg down, there was no real reason to exit until over here. So you could have held through all of this. You have to learn how to hold through minor reversals. That's just part of trading. If you don't know how to hold through minor reversals, that's okay. But it's a skill you should really work on honing, is holding through minor reversals, because if you can't do that, you're just not going to make money, unfortunately. But I think that learning to hold through reversals that don't need a second leg is going to be is in general a very big key to success. So 19, a bull bar closing near its high, a close above the moving average, probably going to get a second leg up. The bulls are hoping for good follow through. 20, a doji bar, probably buyers below, willing to scale in lower. You can see we got buyers below on 21. Outside bar, probably going to go at least a little bit higher. If the bears get a big bear bar closing near its low on 22, a lot of bulls will start to look to exit. And instead, we got a bull bar closing near its high on 22. 23, a bear bar, probably sellers above, scaling in higher, but 22 is a good bull bar, and we're holding above the moving average. This is a really delicate bull trend. So it's a bull trend, but one good-looking bear bar will pretty much put an end to the bull trend. 24, a bull bar. It's looking more like leg in a trading range right now. And we're trying to get a trend line break from, basically the sell-off from yesterday's bar 37 or Friday's bar 37 down to bar 8. So we're trying to get a trend line break. 26 or 25, a bear bar. But probably, you could say probably sellers above, but we're in a tight bull channel up. Something to think about. I'm going to move over to here. If you're buying above 25, you know that this bull trend is not very good and it needs to get stronger. If this bull trend is going to get stronger, we're not going to trade back below bar 25. So it's because it's essentially going to form, when we traded below here, you're going to need this to be a higher low if we're going to rally. Yeah, you could put a stop below 21. That would probably be fine too. But realistically, once we trade above 25, if 26 becomes an outside down bar, the bull trend is the probability of it is decreased dramatically. So I thought it was reasonable to buy above 25 and basically just put a stop below it. The stop below was aggressive. I bought in the middle of bar 26. So I bought during 26. And again, when I see 26, not really an ideal bar. But if we go below 25, then it's a lot less likely we're going to have a bull trend. Again, I think 21 is a valid place for a stop too, because spike and then pullback, this is the bull channel, and you're hoping for a breakout above, right? You're hoping this doesn't convert into a trading range. And if it does get a breakout above, then we're probably not going to go down here. However, if this is going to turn into a trading range, we'll probably pull back into this area. So traders can buy above here and just take a chance that we get the upside breakout, and we're going to go try and hit all of these magnets. This close, this close, this close, that close. So traders can buy and take a chance. You can look at it as buying above 25. One second, I'm going to sip water. You can look at it as buying above the bear bar, but I was kind of just looking at it as buying the bullish context. And then obviously when we get 27, that's the bar I wanted to see. So I know that if this trade is going to work, if we're going to get the bull move that I'm thinking we're going to get, I'm going to get a good looking bull bar before we go below here. And this is one of the times where I did get the good looking bull bar before we went below here. 27, a big bull bar closing near its high. Yes, it's a buy climax and you could take some profits, but there's not really much for bears to sell here. And we're probably still going to go higher. We should go above the high of the day because it's so close and it's such a good looking bull bar. And we have magnets above, and again, the rally from Friday still should get a second leg after the 50% pullback. So I still think it's reasonable to be buying the close of 27. 28, the doji bar, pause bar, but nothing to sell, probably still going higher. 29, another bull bar, good for the bulls, 4 straight bull bars, so it's by the close, a 4-bar micro channel. When you get a 4-bar micro channel, 80% chance of a pullback, 80% chance of a second leg up. So reasonable math to be buying here. 30, another bull bar, probably sellers above, scaling in higher. The only reason I say probably sellers above, scaling in higher is because we should get a pullback, 80% chance. But, they're scalping them for a minor reversal. 31, a doji bar, probably buyers below, scaling in lower. 31 is a minor reversal. Think about 31. If you're long and you see 32 and 33 and you start to get scared, you can always just go back to the logic of 31 should not be the high of the day. And so you can always just use that. There are buyers below 32. 32, a bear bar, probably buyers, like I said, below 31. 33, a tail on the top, initially sellers above 32. A bear bar closing near its low 33. It probably doesn't need a second leg down, but if 34 is a big bear bar closing near its low, then the bulls are going to have to exit, because if 34 is a big, good-looking bear bar, it's more likely that bulls are going to exit, because that would be 3 straight bear bars. And if we get a bear bar down here, we're going to need a second leg from 33 and 34. So why I bought the close of 33 was because I knew that if for 34 was a bear bar closing near its low, the management would be really easy and I would just get out. And if it was anything other than a bear bar closing near its low, then I would just hold. And so those are the trades that, a lot of times will make the most sense to take, is fading or, a counter trend reversal, when, fading a bear reversal when we're always in long, fading a bull reversal when we're always in short. And if it starts to clearly work, then you can just exit. And if I had sold below 33, I would be pretty disappointed in 34, which gave me confidence that we were probably going to go above this high. 35, a bull bar, probably, we traded above 34, so probably initially sellers above. Sorry, I had to pause. I believe I left off on bar 35. 36, a bull bar, but a large tail. At this point, I know this is the pullback, and I'm looking for a bull bar closing near its high to confirm to me that we're probably going higher, and 37 would be that bar. So I know we're probably going higher. A 4-bar micro channel, 34, 35, 36, 37. Buyers below 37 for a second leg up. A doji bar, probably potentially sellers above, scaling in higher, but I would not sell up here. I think this is too bullish. We've had so many bars above the moving average. So traders who sold it, they scalped out quick. This is more of an area to buy the close. 39, a bull bar, a doji, 40, follow through. We're obviously going to go above this high. The rally from 26 31 needs a second leg up, and we're probably about to get it. 41, an inside bar, probably a high 1. Initially sellers above the high 1 on 42. A midday reversal on 42, but 42 doesn't need a second leg. It's not a very good looking bar, and really it's just a bull trend. It's just a minor reversal in a bull trend. It happens to be on bar 42, but really it's just a minor reversal in a bull trend. Not really a reason to sell. I personally did not exit my long below 42, as I mentioned. An outside up bar 43, 42 an outside bar, 43 an outside bar. So we have an OO pattern. We're probably going at least a little bit higher. 44, a bull bar, a tail on the top, and another follow through bar. 45, again, 43, 44, 45 is going to need a second leg. So buyers below, scaling in. 46, a doji bar. Again, probably buyers somewhere below, scaling in. And 47, another doji. We're going to go higher. You know that we need to get one tick above 45, because 43 through 45 needs a second leg. 48, another bull bar, but a tail, and then follow through 49, 50. Climactic on 50, breakout above the bull channel, right? And over here, it's a smaller version of the pattern, but we have a bull channel with the bodies, and then a breakout above and a pullback. Bull channel, a breakout above, a pullback. Obviously, it led to a much deeper pullback a little bit later. 53, 54, 55, 56, 57, 58. Yes, it's a bull micro channel. However, it's a late leg, and these are doji bars, so you don't really want to buy. And this is more of one of those situations where instead of 70 to 80% chance of a second leg, this is probably more like 55 to 60% chance of a second leg. So it's really not that great to be buying the close 56, 57, 58. But you could hold always in long. If you just held always in, you probably don't get out until 62. If you really were determined to hold and kept your stop below the bottom of the bull channel, because keep in mind, markets can break higher lows in channels. Those are their support, right? So this is support, this is support, this is support, this is support. But unless we break clearly below the bar 34 low, we might still be always in long. since this is the start of the bull channel. So spike, pullback, bull channel, possible trading range. But if trading range, and this is a leg in a trading range, then the sell-off would also be a leg in a trading range. So you'd be expecting a bounce. 59, a doji bar, probably buyers below, scaling in lower. 60, a bear bar, a tail. Again, I think we might have to go back somewhere down here because this is not a great area to buy. And then obviously the bulls gave up 62. First reversal up 63. Not great. Too many bear bars. If you're going to buy it, you need a wide stop, probably somewhere down here. 64, a bear bar closing near its low. Probably buyers below, scaling in lower. Same thing here. Buyers below, scaling in lower. Should be buyers somewhere down here, scaling in lower. Spike for the bears, pullback, and then bear channel 1, pullback 2, pullback 3, a wedge to 69. Do you buy above 69? I probably wouldn't, simply because it's a really tight channel down. If I did buy above 69, I would have a stop, a measured move down. So what you do is you buy small here. Well, probably a little more than a measured move. So that's around the bottom of the channel. So I'd probably put it somewhere down here. But I would buy, if you did buy above 69, I would have been buying more at the low of 69. The tight channel down needs a second leg, but 69 is a big enough reversal that if we go below it, we should bounce back up into that area. 71, so 70 is the second leg for the bears from the tight channel, and then 71 a bull bar. We're probably going one tick above 70, since 69 up into the reversal high of 70. We're probably going to get somewhere up here. 72 consecutive bull bars. You could have bought above 71 for a swing or waited for confirmation. 72, 73, buy the close, buy the close, buy the close into the end of the day. For stop orders on the day, 9 is your cookie cutter swing trade. And then in 19, you could buy 22. Not as good in here, but higher probability. You can buy any of these closes. You can buy any of these closes, any of these closes. I think this is climactic, and probably one, this to me signals 60% chance end of the trend, 60% chance one more leg up. And we got the one more late leg up. I would not sell on a bull trend day, so I would ignore all this personally. And maybe buy above 69 with a wide stop, but I'd rather, buy the close of 70 and treat it like I bought above 69. So here, I know that we're going to pull back. I did this with one share late in the day, so one SPY share. So I was done trading, and I peeked at the chart at bar 70 as it was closing. And I know that the trader who bought above 69 is probably not going to get trapped. So I can buy the close of 70. And if 71 is a consecutive bear bar, so 70 and 71 are both big bear bars that make you think we're going to get a second leg down, I can just exit. But instead, I think that we're probably going to get a second leg up back to this area. So I bought the close and I just exited my, for like 50-cent profit, because again, it's just late in the day and I didn't really want to. It was more just a for fun thing that I was doing. But then obviously we got buy the close rally back up to the high of the day. And that's how you should think about limit orders. You don't think of yourself as a limit order trader. You think of yourself as a stop order trader who's sitting through a pullback for the most part. I'm going to turn on extended hours. I like looking at it a lot of the times with these. So in bull inside bar, it's a high one for the bulls, but the same way the low one probably leads to a pullback, and then a second leg down, the high one will probably lead to a pullback. So I'd imagine probably somewhere sellers above here scaling in higher. Possible we get back up to the sell climax high up into this area or back to this low. And the weekly chart, I guess it's Monday. It doesn't really matter. The monthly chart, will be closing at the end, obviously, basically the end of the year. And it'll be interesting to see if it gets a bull close, which would be minimum follow through for the bulls. Even if it is, it's probably not all that great. And then why not take a peek at the yearly chart? We can. I'll just use the SPY. Actually, let's use the SPX. But the yearly chart, obviously, it's really difficult to think about the yearly chart, because I think that, they talk about, was this a bear close? Okay, it was. But, you hear, I think everybody who's listening to this video has probably heard at some point in their life somebody say, the stock market averages a 10% return every year, or the stock market averages a 8 to 10%. The number varies a little bit, but if you just Google, what's the average stock market return per year, people will say between 8 and 10%. And, you could cherry pick it and go from here, but even since, let's say here, the open of 2019, we have gone up, 146%, 150% in 5 years. And that's an average return, I suppose, of like 30%. 150 divided by 5, 30%. So when we're averaging triple what we should be, it makes me wonder how much higher up the market is going to go without pulling back. And, I don't know how far we pull back. I really don't have any idea. But obviously, if the correction starts, we'll have an idea. And I'm not trying to be this, Michael Blurry person who's always caught saying, oh, well, it's probably going to go down. It's probably going to go down. But truth is, I've been trading since this bar. So to me, I don't know what trading through a massive correction looks like. Obviously, I traded through this pullback. It just looks like a tail now, but that was the COVID crash. Obviously, I traded through all these years, but I'm just very interested to see what the next 10 years of the stock market look like. And, I'll be interested to see where we are somewhere over here. But again, I've mentioned before, I don't think we're done with the number 5,000. But that's really all I have to say about it for now. All right, that's going to be the video. Obviously, there's no video tomorrow since it's a half day, and obviously on Christmas there's no video. So Thursday and Friday, I will probably get back to the regular schedule. I will make at least one video between Thursday and Friday, and I hope everybody has a nice Christmas.